Good morning, all you lovely traders. We have some big things happening in our market today, don't we? Got the S&P pulled up here. Let's talk about what we're going to discuss in this video before we begin. And if you're interested, then you can continue to watch. And if not, then we'll see you in the next video, maybe. Um, so what I want to discuss today is, number one, is the S&P and NASDAQ actually going to break below this channel that I've charted, which I've explained numerous times in previous videos. We have lived inside of since March 2020. We are now testing support, and actually for the first time, you can see S&P is starting to break to the underside, though I have my doubts that will be confirmed in the next few days. I think at this point it's just merely a test, but we'll talk about that. All right. Second thing is, can we see some hidden bullish divergence on the S&P, the NASDAQ, maybe even the Dow or the QQQ? We'll go over that and what that means. And third question we want to discuss is, will our crypto markets begin to decouple from the sentiment of our stock markets? As we have seen in the past, there is tight correlation, maybe a little bit lagging, between what the S&P, NASDAQ, Dow, QQQ, what our stock market does, and how that in turn carries over into the crypto market. Bitcoin tends to follow the stock market, Ethereum follows Bitcoin, and all of the rest of the crypto space. All right. So will we finally start to see a decoupling? Because I imagine and envision at some point in the future, as crypto becomes its own world in the financial and global financial spectrum, that we will begin to see this decoupling effect take place. So we'll talk about all three of those issues. Stay with me. All right, let's get to the first one. We see that S&P is definitely testing the bottom of this channel. Again, we have lived inside of this. Let me zoom out. Since March of 2020. Never really breaking below. Well, actually in April we did, so I take that back. Quickly, we broke below a couple days. But since April of 2020, we have never actually broken below this channel and confirmed it. You have a couple wick downs here. Those were real quick tests. Nothing was ever confirmed. So confirmation, remember, again, we have to close below this channel. And then the next day, I want to see us open and close again below this channel for confirmation that we are breaking down below that channel. As of now, my current theory is that we are simply testing that bottom line support, and I think later on in the day today, you'll see the bulls take us back up and into this channel. All right, this is just a quick test. It's my opinion. Now, of course, we'll find out whether or not that opinion proves correctly at the end of the day. All right, what am I seeing or what am I saying as far as bullish divergence? All right, let's jump over real quickly. So I have discussed recently in the altcoin space, there are many charts that show there's definite bullish divergence. That's when you see on the RSI a trend up, but the price action shows a trend down. So in the S&P, NASDAQ, and Dow Jones, I think we can make a case for hidden bullish divergence. Now that is distinct from bullish divergence, because in bullish divergence, remember, price trends down while the RSI trends up. Hidden bullish divergence means that the price is trending up, but as a matter of fact, we can see the RSI trending down. So let's jump back over to our stock charts and see if we can make a case for this. Now, quite honestly, I'm not exactly sure where to start, but I'm going to start at this juncture here because this kind of makes my case. And yes, that is a little bit of confirmation bias, maybe, but I just quite honestly don't know where to start. If we do start from that juncture, you can see definitely that the RSI is trending down. If we start on that same juncture in terms of price action, we start over here one of these days, and we are actually on this bottom, the bottom of this channel. So I really don't need to draw another trend line because you can obviously see that the trend in price action is up. So if we started there, we can definitely see that there is some hidden bullish divergence. If that hidden bullish divergence plays out, what that means, again, is that the S&P will not continue its trajectory downward, but will in fact at some point, and it can come all the way down, it can come all the way down to our 200-day and still have hidden bullish divergence. All right, do you see what I'm seeing here? So if I were to draw a horizontal line, you can see where I started was here. And the 200-day is actually almost up to that horizontal line that I've just drawn. So that is still considered bullish price action. All right. So we could break this channel, and I could be wrong. The bulls won't take us back into the channel for the time being. I'm just speaking um, within the next day or two, we'll see the bulls try to take us back up there. Now, we could hit our heads on that 50-day even this week and come back down. And then we will break out of that channel before the weekend. And maybe we come all the way down and test that 200-day. But once we hit that 200-day, I believe that's going to provide some strong support for a bounce back up. And then at that point, we could actually make the case that maybe, come on, maybe we're trying to form some sort of no, scratch that idea. I was thinking it could potentially turn into a head and shoulders pattern, but I don't think that is the case. Anyways, moving on. What do we see in the NASDAQ? Is it the same thing, or do we see something different? All right, wait for our channels here. So again, my theory was that we are turning the corners, and on all of these charts, we are going to come back down and touch and test this channel support. It looks to me like with the NASDAQ, it's no different. That's in fact what we're going to do. And so what do I see as far as bullish divergence? All right, well, you can see clearly here. All right, so maybe, well, it does head down a little bit, very slightly, but that is definitely a bearish trend on the RSI. And yet, if we take our price from that particular point and do another trend line, you can definitely see the bullish price action. The price action is definitely bullish. All right, so that again is called hidden bullish divergence. It is when the price action differs from what we see on the RSI. I don't think the Dow Jones is any different. Now, guys, I drew this head and shoulders pattern when when we were up here in this time frame, and I wasn't sure that it was going to play out. It was just a suspicion that we might have a head and shoulders pattern forming here. And check it out. Looks like we are having our right shoulder form. So we have to be cautious of that and be aware, because probability suggests that head and shoulders patterns And I'm not exactly sure what the probability ratio is, but that they will play out. They don't always play out, but we definitely do have to be cautious and consider this. If we come back down and test this neckline, that causes us even more caution. All right, because below this 200-day moving average, there is a much greater chance that this head and shoulders pattern plays out. Right now, it's just theory. I've just thrown it up there as a possibility. All right, so it doesn't mean it's going to play out, but we have to continue to watch this. All right, and there is the possibility that we hit that neckline and then the bulls come back out and take us way up, and that negates this pattern. The pattern is no longer valid at that point. All right, let's check for divergence. All right, let's start here, and you can see on the RSI, once again, I don't have to draw the trend line up there, but you can see the trend on the RSI is headed down. That's bearish. But if we start from the same price point, all right, that's on the 20th of September, and you were to draw your trend line, the trend line would be this neckline of the proposed head and shoulders pattern. It is heading up. Once again, guys, that is suggesting that this head and shoulders pattern may not, in fact, play out, but that the bulls at some point here in the next week or two will come to the rescue and save us all from absolute destruction. I don't think the QQQ is any different. Again, channel test, and you can see, you don't necessarily see bearish divergence bullish divergence, hidden bullish divergence on this chart. Well, if you drew it from here, you would. All right. That is, yeah, you could draw it from there, and you can see, I'll just draw it for you since some of you guys are new at this. You can see the trend is headed down, but what is price action doing from that point? Price action from that point is definitely headed up, right? Slight, but it's headed up. All right, so we have to keep all of these indicators in the back of our minds and use them as variables for determining what we think the overall sentiment of the market is turning out to be. There's a lot of tricks to doing this accurately, and timing is also a variable that we have to factor in. All right, so we're getting towards the end of December. People are going on vacations, hedge funds and investors. They just don't want to deal with trading right now. So they're just selling into cash or going into a more stable position, and they'll come back at it in January and they'll reallocate and they'll do all the things that they do. And that is when I expect, actually, it's my opinion, that we will see another rise in the crypto space that goes through at least the end of February, maybe the beginning of March, and potentially all the way through May. Remains to be seen, and we have to continue to analyze the charts to determine whether that will be the case or not. All right, so anyways, that is my theory, my current theory on the indexes. I think at this point we're just testing the bottom channels on most of these, with the exception of the Dow, of course, which has already broken below the channel. And if I was to make a projection on price action going forward from this point, I would say that if anything, we go sideways. All right. We continue to go sideways. We're not breaking new highs. The new high would have, we'd have to come back above this level of resistance and into our channel again for us to be bullish. But we continue, and we could even continue underneath the channel sideways and still be, kind of a stagflation type of price movement where we don't necessarily have any bullish behavior, but we don't have any bearish behavior either. It's just sideways action. All right, now let's transfer over to our crypto space and see if we're seeing any sort of decoupling beginning. And I'm not saying this is going to happen now, but at some point in the future, if we truly believe in crypto being the future of our global financial systems, which I do personally, I see that uh, transference of power taking place, and even now. But I'm a little bit ahead, maybe, of what will actually happen, a little bit ahead of the collective. But again, to be a good investor, you kind of have to see the future in that way, right? And believe in those things that you are throwing your energy at. And energy equals, in this case, the US dollar for me. That is the energy that I use to support the crypto space. All right. And for some of you, it's the pound or the euro or wherever you are in the world. You're using that to throw support at these cryptos. Bitcoin dominance looks to be bouncing once again off of the level that I have drawn here at 40%. So let's see what Bitcoin is doing. Bitcoin has come down again to this green line. Now, I don't know how many times I've zoomed out on this. Let's do that right now. I'm going to show you where this actually comes from. And yes, that does look like the beginning of a head and shoulders pattern on Bitcoin, but we have a few weeks, if not months, for that to play out, if that did play out. All right. Anyways, this trend line comes all the way back from, yes, right here. That is March of 20. All right. So you can see even back then, though I didn't have the trend line drawn at the time, the market was, this coincides with the 50-day and the 200-day way back here, and the market was using this as a form of psychological support, even if it may not have been there yet. All right, because once we, let me circle that so you can see what, and it's hard to see here on this zoom level, but once we dropped out of this price area, we dropped hard. So that definitely signifies, once again, as I always state, it's confirming the significance of this trend line. And then here again, we hit our heads on it, couldn't get above it. But once we did, we rocketed. Again, confirming significance of this trend line. And then over here, we sat on it for quite a while. Once we broke below, we really came down. All right. Once again, confirming significance. Popped back above it and went hard up, and then came back down, sat on it. All right, so all of these indicators prove and confirm the significance of this trend line, this green trend line. Currently, we sit right on top of it. It is my opinion that we don't break below it. I pointed out on the 4-hour chart this bullish divergence. Now, this is different from hidden bullish divergence. This bullish divergence on the 4-hour shows the RSI trending up while the price action is actually trending down. And in this case, we use the RSI to signify what future price action might be. All right, I'm drawing short on time here, so I'm going to make the rest of this quick. Anyways, it is my opinion that this green trend line holds. On another video, we'll talk about this head and shoulders pattern I see and what that means for our crypto space, specifically Bitcoin. But for now, we don't have the time to do that. Right now, I am saying that we will continue to stay above. We will not come into this area. That is too much for the bears. The bears are running out of steam, running out of energy. The green trend line is going to keep us up, and we will end up doing battle with this red trend line here. And that will be the battle of the bulls and the bears. If the bulls win, we start to go bullish again. We start to come up into this territory, and that's when the rest of the crypto space will follow. Ethereum, the bulls, or the bears, I should say, just do not have the energy to bring us below this neckline. And that is a good sign. That is a bullish sign that the bulls will come back out again to play and take us up into new territory. Again, there is hidden, or not hidden, but this is bullish divergence on this chart. If I were to zoom down to the 4-hour, you can see that. So, guys, right now, overall, I am thinking that the crypto space is at the near the end, as always, and we are headed up soon. But do be careful out there. Stay safe in all your trades. Talk to you.